don't look like a venture capitalist. Well, before I met Elaine over the phone, I thought VCs were like, Wolf of Wall Street sort of thing, masters of the universe. But you're not.
Mostly.
And you're very lovely.
Mostly they wear chinos and a Patagonia vest. So no, I don't do that either.
We're not categorising. So tell us about, what does Blue Sky do?
Oh, Blue Sky is an alternative assets fund manager. We do a whole bunch of things. We invest in agriculture, where we have a hedge fund. We invest in private equity and venture capital, which is where I sit as well. And we also do property, so a whole bunch of things. But venture capital is the investment into private companies, which are generally fairly early stage businesses.
So what is the difference between, this sounds a really dumb question, but I wasn't very big on the finance thing, and I thought, what is the difference between a venture capital or capitalist and private equity?
Good question. So venture capital is a form of private equity, and private equity just means investing into private businesses. The difference between private equity and venture capital is just the stage of the business. So venture capital investors invest in quite early stage businesses, which I would say would be anything from a seed stage company or an idea all the way through to what we would call expansion capital, and then it kind of ticks over into what you might call private equity, which goes all the way up to really big businesses, some of which have made the papers lately, and we probably shouldn't mention them.
Okay. So in terms of what you look for when you're investing in a business, talk us through some of the criterion that you seek out.
So we look for all the same things that every venture capitalist will say that they look for, which is companies that are doing things that are particularly innovative, and generally we like to look for disruptive things, because those businesses tend to be the ones that have the highest growth rate, and that's really what we're looking for, very high growth businesses that are going to go from an idea to something substantial very quickly. We like to have them addressing a really large market, because obviously that brings greater opportunity. But outside of that, what we're really looking for, and actually Glyn, you articulated this very well, we also like to look very hard at the people in the businesses. So we are very clear about looking for value and ethics and culture fit, as well as those sort of more transactional elements of the business about market and growth rates and that sort of thing. So we like to spend a lot of time with founders and the management teams of the businesses that we invest in. I think actually we should use your software, because we think we're above average interviewers as well. But we like to spend a lot of time with the founders and really get a sense of who they are and make sure that we're on the same page, because you're often attached to an investor for longer than you are married to your husband or wife, and so you need to make sure that you are on the same page from a values and a culture standpoint.
Yeah, that's a really interesting perspective. So it's not just about the money, which I think is a surprising fact for a lot of people who aren't familiar with VC. So talk us through the things that you actually do with the company, because you don't just give money and say, bye, I'll catch you in a year. You actually get really involved. Talk us through the practical things that you do to help business owners, like Andre, which we'll talk about in a moment, because you've just done a big deal. Yeah. Yeah,
we have, which is super exciting for us. Look, so we definitely provide capital, but hopefully, if you're approaching a VC, it's not just for money, because you can get capital from other sources if that's all that you're looking for. Most people who try to obtain VC funding are really looking for some extra added value or expertise that a venture capital group can bring. And so this is why it's very important that you do your research about who the venture capitalists are in the space, in Australia or internationally, what they focus on in terms of their sector, because what we tend to bring to the table is maybe sector expertise. So a lot of venture capitalists have specific industry expertise. Some of them are retail funds, or some of them are tech funds or healthcare funds, and they really have a lot of domain expertise that they can bring to the table to help you as an early stage business really navigate that path to market. In our case, we're not a sector specialist, but we're a stage specialist. So where we really bring value to the table, we think, is really helping companies expand. So taking them from a few $1 million revenue a year all the way through to something much larger, or navigate international expansion strategies. That's really where we, as a business that started out as a private equity business, we really bring what we think is value. But on a practical level, to answer your actual question, look, we sit on a board and we have monthly meetings with our companies where we help to try and help them guide their overall strategy. But above and beyond that, we try to do whatever they need. So whether that's helping them recruit people, helping them find the right advisors that they can bring to the table to help them navigate whatever is the issue that they're trying to work on for that year. Sometimes we're emotional relationship counsellors. Like really, it's sort of all comers. We do whatever is needed to help a company execute on its strategy.
One of the things Elaine and I talked about was, well, how does someone approach you? You know, what's that dance like? And I was really interested to see that you're very comfortable having a coffee with anybody just to get the, well, not everybody. Let's refine that just a little. In terms of you're open to having a conversation with a business in advance of you actually having success.
Well, we prefer
maybe you say it better. You say it better. You tell me what I'm trying to say.
Look, we like to get to know businesses well before we actually invest. I think one of the biggest mistakes we often find young companies make when they approach a VC group is they come to us and they say, we're raising $2 million and we're closing in 4 weeks. And we've never met these people before. We don't know them. We haven't worked out whether we have the same ethics and values and culture, and we haven't had enough time to really get to know them, and even if we had, we can't do those things in 4 weeks anyway. So we do absolutely encourage people to come and talk to us, introduce the concept of their business. I mean, Mark's been talking to us about Just for over a year now. So we've gotten to see the journey that Mark's gone on and how the business has grown, and it allows us to do this sort of background investigation and research that we need to do about markets that perhaps we're not natural domain experts in as well. So absolutely, we encourage people to come and have a coffee with us. We come to these events all the time, these types of events. I think I've probably attended 50 events in the last 12 months. So we're always around. You can easily just tap us on the shoulder and have a chat to us over a glass of wine.
Fantastic.
Or coffee.
So just in terms of the numbers, what would be the minimum investment that you would invest in a business, and what would be, you know, the upper end?
So for us as an expansion stage investor, so we're not the investor who invests right at the very early stage when you're a seed stage or an idea stage business. So the minimum for us tends to be around the $1 million range, going all the way up to, generally it's about 15 million, but in the case of Vino Mofo it was a lot more. We had a lot of conviction around what Vino Mofo were doing, and they needed a larger quantum of capital to execute on their strategy. So anywhere from $1 million to about $20 million is really our sweet spot.
Great. And in closing, can you talk us through that example we talked about, Hatch?
Hatchtech.
You know, lice, you know, any parents with small children? Lice, you'll know what an issue it is. Talk us through, real quick, that case study and how you got involved and what the result was.
Sure. So Hatchtech is people always start scratching their heads when I talk about Hatchtech, so I won't mind if you do it. Hatchtech is a Melbourne-based company that developed a novel treatment for lice. I know you've probably been to the chemist and you've seen a bunch of lice treatments which say that they kill lice and eggs, but I guarantee you they don't, and any parent here will absolutely furiously agree with me on this. But this is a treatment that literally kills the eggs and the lice, so you just put it on for 10 minutes, you don't have to nick comb, you just wash it off your kid's head, no more lice. It's fantastic. But they've been around for now 12 years, you know, busily undertaking the clinical trials that they needed to do to validate this technology. We swanned in right at the last stage, along with a whole bunch of other specialist biotech investors in Australia. We were very lucky to be involved, and very happy to say that within 18 months of our investment, that business executed a commercial partnership with Dr. Reddy's, which is a large multinational generics pharmaceutical manufacturer, and about to, will hopefully get FDA approval to launch that at the end of this year. So that commercial partnership was worth US $197 million.
Wow, what a great opportunity for everybody.
Yeah, and we expect the same for Vino Mofo, so...
Yeah, no pressure there, Andre. Well, on that note, please thank Elaine Stead. Thank you, Elaine.